Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and look at potential hotspots in the markets for today. Today being December 2nd. December 2nd, Thursday, December 2nd. I still can't believe I'm saying that. My name is Todd Rich. I'm with Nadex. With me from Keep Trading Simple is Brian Caprice. Before Brian and I jump into it, we do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So what are we looking at today? I just dropped a link for the economic calendar from Daily FX in there, but we did get some interesting, I guess interesting or positive news for the economy in as much as our continuing jobless claims and our initial jobless claims both coming in lower than forecasts. So the job market is continuing to improve. Now, later today, we do have some Fed folks speaking. And as we know, uh, clearly Powell said some things earlier in the week that riled the markets. I don't know if any of the other Fed folks are going to say anything as inflammatory or as uh, volatility inducing, but it's possible. So we certainly have that to look forward to. What we also are seeing, interestingly enough, in the markets is we're looking at a day where um, the Dow is looking to open up 0.5%, and currently we got the Nasdaq looking to open down 0.5%. A little bit of divergence there. Where we're seeing Nasdaq down, but we're seeing the Dow up. So uh, in any case, let me go ahead. You know what? The one last thing I want to remind everyone: if you haven't seen it or haven't registered for it yet, we do have the boot camp coming up next week. I am going to drop that link in and show it to you. Please, by all means, share this with your friends. Anyone can register. There's no cost to register. There's no cost to attend. But if you register, you will get access to the recordings afterwards, as well as the ability to request any of the slide decks. So even if you can't make it next Tuesday, register so that you'll be able to consume it in your own time, as well as get access to the resources. So with that, I am going to flip it over, Brian. I'm going to flip it over to you, and let's just kind of see what we got going on in a slightly quieter open than we've seen earlier in the week.
Yeah, I mean, we knew going into this week that Thursday was going to be kind of the slower day. The unemployment claims came in great. That's going to kind of go into what FOMC member Barkin is speaking about 11:30 a.m. today. He's doing a state of the labor market. We all know that labor is what they're saying, and it's more the labor participation rate, not the actual claims numbers and everything else. And again, with everything going on with COVID, I think the participation rate is always going to be a little bit. It's going to be a question right now. I don't think
Yep.
there's, it's just some people are just not going to feel safe, not going to go back to work, looking for that remote type position. So I think that's going to be something that's going to, although we had a great positive number, it'll probably be, Barkin will probably be the fair balance of it today and talk about it. Yellen is speaking, leading the way into challenging times, but I don't know. It's one of those things that's, I don't know. I don't know that that's really going to be that big of a market mover today. Because again, it's kind of who knows what's going to happen next. So it's kind of hard to talk about leading because on a global front, the United States is not leading right now with digital currencies and everything else. But besides that, it's been rather quiet. I think everybody right now is waiting to see what happens with this OPEC basically OPEC Plus meeting later on today. We haven't heard anything from there yet. There's a couple different articles about it. If you guys want to kind of watch it, if you're looking to trade something today, oil will probably be volatile based off of their statement. So it's kind of one of those ones you kind of got to get an opinion about it now. Once the news is out, the market will already move, and it'll be a little bit too late to get in. But there's an interesting article down here about it. Talking about how the big gyrations in the market, how much it's dropped from the 86 down to the 70, and actually even lower than that in some of the pricing. So it's one of those things. The way OPEC Plus has traditionally done it in the past is they're very big on stabilizing the market. They don't like these big up and down because it's very hard to forecast things. They the Biden reached out and said, "Hey, you need to release more oil," right? But unfortunately, with the way that the markets have gone with oil, um, you know, watching it tumble the way that it has, um, this is 2 months ago we were up in the 80 range, so it's $20 in 2 months. OPEC is not going to be very motivated to do a whole lot with this. Anybody that believes that is kind of, they like their money. And again, it's continuing to push lower right now as we wait to hear. Now, with the price pushing down, I think that's a good sign. I would be looking for more long opportunities here. Reason why is because, again, with the price dropping down in the pre-market hours, the United States likes the price of oil higher. We do have a lot of U.S. companies for it, so I think that could be something to watch out for today. The way that you would trade that is again,
by the way,
if you can
but we also export a ton of oil.
Yeah.
How many hundreds of millions? I mean, how many millions of barrels do we export? Every month. So
yeah, it all goes back to Canada. They send us the raw stuff, and we send them the oil back and make the price twice as much, and then put it in liters, so it looks good.
To confuse everyone. Oh,
yeah,
I love
gas is so expensive up there. Oh, I go up there and I'm like, wait, how much is the liter? She's like, oh, it's like $6 a gallon. I'm like, what?
Like, but I got them.
Yeah, it's crazy. But anyway, with price pushing down before our session and before OPEC Plus, I don't think OPEC Plus is going to say, yeah, we're going to release more and drive it back down into the 40s. They're in this to make money. I just don't see that happening, particularly because, again, right now, if you also think about it, one of the biggest members of OPEC Plus is Russia. Right now, Russia and the United States are throwing diplomats out. You got 10? Okay, I'm going to throw 10 more. So
right.
Biden is the one that asked for them to release more. I doubt that they're going to say, hey, your diplomats are gone, but we'll give you more cheap oil. They're not going to hurt themselves like that. So I think that's something to watch out for today. The only other big news, and again, seeing the labor market the way that it was, Hungary has now done their 4th rate hike. So there are countries out there raising rates, okay? Again, I think that's really kind of where we need to start transitioning. Nobody knows what Omicron is, but we do, what the impact is going to be. But we do know kind of interest rates are going to be changing. So, I think the big things to look at today, again, the VIX, we had a huge spike up in the VIX yesterday. Again, there was that confirmation that Omicron was probably in the United States. That's probably what drove it, as well as some of the comments out there.
Yep.
Yeah. So again, we have this going on, and as Todd mentioned, right now everything is in the green. And again, with such a big spike, it's already starting to gap down again. Again, this is that parabolic move we talked about, and again, probably seeing a bit of a retracement. And again, even though 23 is high, it's a lot lower than the 32 it was at close out yesterday. So that should be green for the overall indices. You're seeing NQ down. And again, in reality, I mean, this is a 30-minute chart. We typically do the analysis on a 15. Here's your 30-minute. Big spike and kind of a rollover. NQ, the big spike and the rollover. It's just a little bit farther down. YM, the big spike and it's starting its rollover. Russell, big spike. And they look exactly the same. If I click through them, besides NQ, which is a little bit lower, and again, the reason why NQ is lower is this. I don't know if you guys can see this. Let me blow it up just a little bit higher.
Tesla, yeah.
But Apple obviously is a major component of NQ. Apple telling suppliers iPhone demand has slowed as holidays near. And when you look at the chart just very, very fast, the iPhone 13, the latest and greatest, it's like what, 65% of people say I'm not going to upgrade. Only a few are thinking about it, and less than maybe 10% say, yeah, I'm going to upgrade. Where traditionally this is much, much higher. And again, the reason why is because unfortunately the technology is outpacing. It's kind of like, well, what does it do different? Well, it'll do this, and we don't send you a charger. Do I need to upgrade right now? I don't know what's going to happen with Omicron. We could shut down again. So there's a lot of things. This is a big deal. And again, it's the reason why that, NQ is kind of where it is. Now, it is bouncing off that 15,800 level. There's a couple other ones, a little bit below it. I would say looking at all of them right now, I mean, start with ES. ES is kind of starting to kind of falter. And again, it came down and tagged the 4,500 yesterday. 4,500 is not only a psychological level, but the way that those candles were formed with a consecutive higher candle, actually 3 consecutive higher, that typically tends to be a good area where buyers are stepping in. So, labor market looking good, better than expected. We had the huge spike yesterday in the VIX and things tend to retrace a little bit. Is this kind of the bottom to where we can go a bit long today? And I would say probably. I mean, that's the way that it's looking. I mean, all the Apple news is in. Apple's going to have a rough day today. But, again, Tesla had a rough day yesterday. Right. But now it's going to probably start to build back up and probably go back up to that 13, probably, I'd say 13, 11:30 today. So, again, if ES, if YM, and again, if Russell are all kind of putting in higher lows and starting to kind of trend back up to retrace some of the losses from yesterday, the NQ will probably get drug up there. So again, the best way to play this one, and again, we're a little bit early. It's only 55. Kind of see what it looks like on a 15-minute chart. I mean, again, these two. I mean, look at this. These two are almost identical with their movement. ES also just a little bit lower, and again, right at that same level. So I mean, ES is close to a buying level. NQ is starting to come off of a psychological level as well. And again, I think there'll be a little bit more of a push because of. And one possible way you guys could play this is everybody knows that what the Apple news is, right? We know that Apple right here is already gapping lower. This happened in the overnight. But all the retail traders that haven't gotten the ability to short or sell their Apple yet, they still have to get in.
Right.
So there may be another push down, which could, again, that could bring the NQ down, right? Maybe, I don't know, maybe down to a level in here. And then when everything else starts to roll and go back up again, NQ could be the weak one. Okay, so again, if the VIX continues to fall, the way to play it is probably going to be in the Dow. The Dow is up the best. Actually, ES is a little bit lower, but in a better buying area. So a couple different opportunities to go long. And don't forget, there is a 1030 reversal that happens a lot of times. So you still have the ability to take advantage of that. But, seeing oil down 1%, seeing gold down 0.4, everything looks good. And again, TLT also gapping much, much higher. So again, bonds going straight up. Remember, money comes out of indices, it goes into bonds. Seeing bonds high on a kind of a spike yesterday, I would also expect bonds probably to pull back a little bit again. Even if it's going to go higher, you have the impulse move and then the correction move before you do the impulse again. So as the bond comes down a little bit, bond prices come down a little bit, that should roll back into these Cs and also provide a little bit of a benefit here. So again, cheap oil, cheap oil is good. Gold being cheaper is good. Seeing natural gas down again, or breaking below 420, down another 1.8% today. I would say look for some good opportunities this morning. Like I said, NQ is negative now, and I think it'll get a little bit, but I bet you it turns green later. And again, jump on the strength. Don't play. No point playing the weakest long when you have a lot of strong out there.
Right. And again, I would tend to agree with you. I think we'll see how the open goes. But yesterday we were having a pretty solid day up until the panic hit that they found one person in California. Yeah. What I think is interesting still
California
is that
and messing it up.
Yeah, they went. And we had to know that it was here already, right? It's a virus.
Oh, yeah,
it's gonna get here.
Yeah. But I think it's just being official. And we said that Monday. Anytime we hear a headline about Omicron, especially when it's here, it was in Canada Monday or Tuesday, we knew it was going to be here. But as soon as you heard a comment about it, oh my God, it's real, now it's on our shores, you knew there was going to be a drop in the market. And again, the way to play a lot of these guys, and again, I'll bring this up from yesterday. We knew that Powell was speaking yesterday. We actually had a fixed time when we knew he was going to talk. There was some great opportunity. I went out, and again, if anybody, is questioning this, email me and I'll actually send you it. I was in the middle of my chart school with my students. I found a call spread, a short duration call spread with $4 worth of risk. $4. So to say that there are not cheap entries out there is ridiculous. And again, it was a call spread. I know not a lot of people look at those call spreads, and I've been preaching it. But if you can get something a little bit out of the money, yeah, you're taking a little bit of risk on it. But we've seen this thing drive straight down in the European session, which again, European session single trends tend to reverse. There could be some cheap options to be able to take the top side, both binaries and call spreads. Now, they're not always perfect. A couple days ago, I found one that I didn't like the risk of reward on it. It just didn't make any sense. It made more sense for me to trade a binary. But you got to kind of scroll through. You got to look at these things.
Knockout, right?
Yeah.
When the premium levels, because when the VIX goes way high, the premium in some of the premium level in some of the call spreads, because that's going to, it has to. It's got that optionality in it. There's going to be that volatility component, but in a knockout there is none of that. It's a delta one product. It just has you clear boundaries. So binaries are then the knockouts become, although there's the volatility component in the binary options as well, it just is not as pronounced as you would see the call spread.
Yeah, and there's a lot more options. So as price moves around, you're getting a little bit more of it in the call spreads, but binaries it'll readjust for where the at the money is.
Right.
In this situation, an at the money binary made a lot more sense than the out of the money call spread. And again, it happens. That's what volatility is. That's why you have to understand all three products. But people that say, "Oh, I can never find them that cheap." I found one yesterday in the middle of chart school, hit the button, and again, $4 risk, and at the end, I just let it go to expiration. It was a $31 payout per contract. So those things do exist out there in the world, guys. You got to look at them. You got to look at everything. Don't be locked into one. But a day like today, where we've had such negativity yesterday and no real news today, and we started off on a positive with less than expected unemployment claims, you got to be looking for some type of reversal. Like that, OPEC Plus is not going to help us. But
That definitely won't help. And
yeah,
then, and that is,
but that's going to be
barring
an oil
some
story.
strange news coming out of the Fed when they're speaking, or
Yeah,
an unknown announcement that you just can't you can't anticipate, which is one
right,
of the
right.
nice, one of the benefits of the Nadex
Yep.
products is that everything's got defined risk. So if you were on the wrong side,
Hmm.
I mean, they moved so quickly. But if you were in some of the more traditional products, you could get completely blown out. So
Yeah, yeah. And like I said, and it's one of those days too. We always talk about this. Gold down a little bit, silver up a little bit, but still in that same area from yesterday. And you're actually seeing all the cryptos down 1.28, 1.23. So it's not like the money is being taken out. And again, they're not running towards the crypto realm with things. The cryptos are actually taking it worse than gold in the overall market. So positive U.S. indices, negative cryptos, and money is actually going back into TLT, the 20-year bond. So it's definitely an interesting kind of transition of where wealth is moving to. And again, it's December. You kind of expect this. You start locking things in.
right.
Uncertainty exists. You go to the bonds.
Yeah,
So
and it
yeah.
does give us these volatile trading opportunities.
Mm-hmm.
You
Yep.
know, because
Yeah.
there is trading opportunity
Mm-hmm.
and possibility to be had. All right,
Yeah.
with that, any questions for Nadex, please email us customerservice@nadex.com. Any questions for Brian? Please feel free to reach out to Brian as well. You can email Brian at support@keeptradingsimple.com. Don't forget to register for the boot camp for next week, and please share that with your friends. Uh, the more people that have access to it, it's going to be a great day with Tom Sosnoff from Tasty Trade speaking, Brian speaking. We got Mark Pietrino, the head market technician and head of education over at Benzinga speaking. I'll be doing some things for people because we have a lot of prospects, people who've never even touched Nadex before who will be joining us. So I'll be giving them some of the basics. But it is going to be an interesting day. You can come and go as you please, or you can catch the recordings afterwards and just watch the ones that you want. What did we go over today? I mean, it really is an interesting day in the market in as much as we've got the Dow up, we've got the Nasdaq down. There is going to be some volatility. Watch those indices. OPEC Plus talking today. That could also potentially move the oil market. We'll pay attention there. And we did get that good news this morning, at least in the labor market, where continuing jobless claims and new jobless claims both coming in lower than forecasts. With that, Brian and I will catch you again tomorrow morning. So good luck in the markets, everyone. We'll see you then. Thanks for joining.